Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. If you're serious about improving your trading strategy, then you need to start using the market breadth indicator. Okay, so basically that's the indicator we're going to be discussing in this video, the market breadth indicator, and this indicator gives you a bigger picture of market strength, helping you confirm trends, spot reversals, and avoid weak setups, okay? So in this video, we're just going to be covering what the market breadth indicator is and how it works. We're also going to be looking at how to use it to confirm market trends, the best strategies for trading with market breadth, and I'm going to be sharing some pro tips to enhance your trading decisions. So make sure to hit the like button and subscribe for more powerful trading content. Now let's just dive right in. So what exactly is the market breadth indicator and why should you care? Now, most traders focus only on price movement, but the market breadth indicator goes beyond that, right? It measures how many assets in the market are moving in the same direction, giving us a broader view of market conditions. Now, why is this important? A price rally means nothing if only a few assets are pushing it up, right? Now, a downtrend could be weak if most assets are not participating. These are some of the reasons why it's important. And also, market breadth helps confirm whether a trend has real strength or if it is just noise. So this indicator is widely used by institutional traders to analyze market health before making big decisions. Okay, if you want to trade like the pros, then you need to pay attention to market breadth. Now let's just quickly break down how the market breadth indicator works and what it tells us. Alright, now there are different types of market breadth indicators, but the most popular ones include the advanced decline line, which tracks the number of advancing stocks versus declining stocks, right? We have talked about advanced decline ratio in a previous video, so you might want to check that out to get more details about that, okay? Because if more stocks are rising, for example, if more stocks are rising, right, the ADL moves up. If more are falling, the ADL moves down, right? That's the advanced decline line. Okay. Then as for the advanced decline ratio, which I said we have talked about in a previous video, it compares the number of advancing stocks to declining stocks as a ratio. So a high ratio means the market is strong, while a low ratio suggests weakness. Okay? And then another way to use the indicator is, new highs versus new lows. Because it actually compares the number of stocks making new highs against those making new lows. So if more stocks are hitting highs, the market is bullish. If new lows dominate, the market is bearish. All right, and then we have the McClican oscillator. It's a momentum-based version of the advanced decline line to spot overbought and oversold conditions. Now, each of these indicators gives a slightly different view of market strength, but they all help traders confirm trends and avoid false signals. Okay, now that you know what a market breadth indicator is, let's talk about how to use it in your trading strategy. The first is to confirm trend, or rather to confirm market trends. So if the market is in an uptrend, for example, if the market is in an uptrend and the market breadth is rising, it confirms strong buying pressure. If the price is rising but market breadth is declining, it could be a weak rally that might fail. And then you can also use the spot trend reversals before they happen. Okay, if market breadth starts falling while price is rising, a trend reversal may be coming. Okay, now this helps you prepare for potential pullbacks or reversals before they even occur. And also you can identify bullish and bearish markets. When a majority of stocks in an index are bullish, it suggests a strong market trend. If most stocks are bearish, even if price seems stable, it could mean hidden weakness. Okay, And then you can also combine the market breadth with other indicators. You can pair market breadth with RSI, moving averages, or volume analysis, to provide stronger signals. Okay. So by using market breadth as a confirmation tool, you can actually filter out weak signals and focus on high quality trade setups. Now let's just go through a guide on how to set up and use the market breadth indicator on TradingView. So you have to head over to TradingView, of course. Head over to tradingview.com, open your preferred market chart. After doing that, you add the market breadth indicator to the chart. Okay. When you click on indicators at the top, you just search for, you can actually search for the market breadth ratio. You can even search for advanced decline line. You can search for McClellan oscillator. You can decide to use either of these singular indicators, or you can use this one as well. Okay. Now so you have to adjust the settings, okay, depending on your trading style, the sensitivity, how you want the sensitivity to be. You can actually decide to you can adjust the settings if you wish. All right. And then you watch out for how the market breadth moves. All right. Compared to price, look for divergences, confirmations, and trend shifts. All right. To plan your trades. Now, once this is set up, you'll be able to spot strong market trends and avoid weak setups more effectively. Now, before we wrap up, here are some pro tips to get the most out of the market breadth indicator. The first is to check multiple time frames. All right. Now, market breadth on a higher time frame, like the daily or the weekly, gives a clearer picture of long-term trends. All right. I might want to use it with volume analysis, because high volume with strong breadth confirms trend signal, while low volume with weak breadth signals potential traps. Also, avoid trading against the trend. All right. If market breadth is showing strong bullish momentum, avoid shorting blindly. Also, watch for divergences. If the market is rising but the breadth is falling, a reversal could be near. And always backtest before using it live. Before relying on market breadth in real trades, test it in a demo account to understand how it behaves. All right. So that is it basically for this video, and that's how you can use the market breadth indicator to analyze market strength like a pro. Drop a comment below. Have you used market breadth in your trading before? Also, what is your favorite market breadth indicator? Let's just discuss, right? If you found this video helpful, hit that like button and subscribe for more expert trading insights. In the meantime, thank you for watching, and I hope to see you in the next video.